So you have 1,000 customers. How many are using the agents that you launched? And I'm getting kind of odd answers because how many tokens were used? And I'm no, you have 1,000 customers. Are 10 using it, 100 or 800?
That feels especially important in AI because the products can get built quickly. Trust, adoption still take work, go to market. I always say that building is democratized, but distribution is not.
And it's just the most expensive way to grow. Why spend money to bring somebody in at the top if you can't keep them?
What are the strongest signs that B2B software company is ready to scale for the revenue?
We actually call it a speedometer of should you go faster, should you stay the same, should you go slower? But the first one is leading indicators of retention. Show me that your product usage is good and getting better. So we can look at this on a cohort level.
Hi everyone, welcome to Venture Signals. And today with us we have Liz. Hi Liz, how are you?
I'm great. How are you doing?
I'm doing well. So I want to just, start directly. So you have a really interesting vantage point because stage 2 at the intersection of venture, but also go to market. So a lot of investors talk about product, category, and market size, but your team is much more focused on what actually happens when a company needs to turn early demand into repeatable revenue. So, and what is something that I really remember from our last conversation, stage 2, is that you are not just investing capital, you are bringing a network of GTM leaders, go-to-market leaders, and also structured scaling methodology around the company. So I want to start questions that a lot of AI founders, especially, are probably not asking early enough. Sure. So in AI markets, are founders overestimating product market fit and underestimating go-to-market fit?
Yeah, so it's interesting. We think about those things as sequential, meaning do everything you can to find product market fit first and then move into the go-to-market fit stage. And so it's not to say under or overestimating, but I do think you're right that early signal on revenue and fast growth makes people assume they have product market fit and they think way more about how to scale revenue. And so we've been spending a lot of time thinking about what are the right signals that actually tell you that a revenue base is healthy. And in a world of AI where we're watching budgets get spent on a bunch of different comparison test products or pilots, it's really hard to know what that actual retention profile is going to look 12 months down the road. And so, if I look at our own methodologies, we look at leading indicators of retention, basically product usage data as a signal for what retention will look like in the future. And it's had to change a lot recently. So I think, once upon a time, we got to look at number of logins or time on dashboard. And those things are just becoming less and less relevant as we have, agentic offerings that are actually doing work for us. And so the type of thing we measure changes, but I actually still think thinking about product usage, outcomes, what you're doing for the customer, and measuring that at a super granular level from day one will help you figure out product market fit. And basically, I think the takeaway for us is I don't want people thinking about go-to-market fit and scale until they actually have product market fit. And so you want them to actually measure the product usage, show the adoption, show that they're making customers super successful, and then start scaling up. And I think it's just been, maybe to your point, just a bit conflated right now that they actually end up happening almost in parallel. And it's just really hard to course correct if you're, have a large sales team or huge marketing budget, but you have a really leaky bucket on the back end from a retention side.
That's great. And you have a lot of conversations with also founders probably about, their strategies and stuff. So what's the usual mistake for traction before they're actually ready to scale that you notice?
I think two. One is just hiring ahead of demand and before the demand is actually there. And so often we see companies saying, hey, I want to grow faster. And the usual mantra in the boardroom is hire more account executives or hire more reps or, spend more money basically. And unless you have a scalable pipeline where you can bring in demand, what the conversion is going to look like, that doesn't make sense. They're really expensive people to put on payroll if the demand doesn't match. So that's number one. And then the second one, I think is kind of what we just touched on, but it's starting to scale the top of funnel before you have really clear processes around adoption and retention. And it's just the most expensive way to grow. Why spend money to bring somebody in at the top if you can't keep them, right? We need to actually have that locked in first.
So
or at
if
least really good signal on it.
yeah, I totally agree with you. Those signals should be definitely tracked, and then afterwards, especially the account executive part, till the founders are very over demand, then yes,
Yeah.
yes, it's the right time. So if
But most people aren't
yeah.
tracking those things. I will say the number of
Mhm.
conversations I have where people conceptually agree and are like, yeah, that makes sense, but then don't have the instrumentation to actually say what people are using. I've had some interesting conversations in the last few weeks because you have a lot of SaaS companies who are now trying to AIify their product, and they're launching
Mhm.
agents and they're launching new things to customers. And the only question I have is, what's the adoption? So you have
Mhm.
1,000 customers. How many are using the agents that you launched? And
Mhm.
I'm getting kind of odd answers. It'll be, this is how many tokens were used. And I'm like, no, you have 1,000 customers. Are 10 using it, 100, or
Mm.
800? And it's even more interesting if you get into the cohort and how those are actually adopted over time. And are your newer customers adopting faster, your legacy customers? But regardless, I'm just always kind of surprised at the level of fidelity of data. It's not there.
I see. Okay, that's great. If the early excitement is not enough, my next question is going to be about how you know the company is ready to scale right now. So, what are the strongest signs that B2B software company is ready to scale for the revenue?
Yeah. So we look at a combination of two things. We actually call it a speedometer of, should you go
Ah,
faster? Should you stay the same? Should you go slower? But the
oh.
first one is leading indicators of retention. Show me that your product usage is good and getting better. So we can look at this on a cohort level. If you are thinking about it in the very early days, you might be having single digit customers, right? And you're just going to look customer by customer. Are they adopting? What can we do to get them to use it more? How do we make it stickier? And then at some point, as you have more, you're starting to see a quarterly cohort or a monthly cohort or even a
Mm.
weekly cohort where you've got at least 5 customers and you can look at the group. And ideally, over time, you're getting better. So let's say you improve your onboarding flow. If
Mhm.
you do that, a month later, the newer customers onboarding now should be adopting faster and they should be showing signals of higher product usage right out of the gate. And so we want that signal, improving cohorts of product usage. And then in parallel, we call it leading indicators of unit economics. But the concept is basically, do you have enough demand and are you converting it consistently enough to go faster? And it doesn't generally make sense to pour a lot of money into go to market until you've showed that you have something that's repeatable. And so that starts happening at the founder level first. You know, a founder will close a number of the first customers, and then you bring on your first go to market hire, and you want to prove you can go from, you know, unit of one doing this to the second person being able to. And then you can start thinking about scale. But starting with, we're going to hire 10 AEs out of the gate and not being able to feed them enough leads is just a recipe for them to be sitting there kind of twiddling their thumbs.
So, what usually breaks first when a company scales before the go-to-market motion is ready?
I mean, look, it depends on the company. If we if you see really good demand, then often the thing you see break is the systems and process internally, and that's a fun problem to solve, right? That means you're
Mhm.
fixing and
Mhm.
adjusting to the demand and the pull in the market. So that would be like ChatGPT launched and OpenAI had to rewrite their internal systems overnight because all of a sudden you have all these users.
Mhm.
But I think what you're getting at is actually the inverse, which is somebody is trying to drive and force scale before the market is pulling them. Generally, it's retention, or it's unit economics getting really out of whack. And so your cost of customer
Mm.
goes through the roof. And so you're spending a ton of money and time and resources and energy to secure a customer. And then you don't know what the retention profile is going to look like on the back end. That's
Mhm.
what I see the most.
Yeah, that feels especially important in AI because the products can get built quickly. Trust, adoption still take work, go to market. I always say that building is democratized, but distribution is not. So we
Yeah.
need to push forward to that one.
And
And
actually,
how,
beyond distribution, it's a customer experience component. So you
yes,
can differentiate now on service and how you make your customer actually feel, right? I think that that's
yeah,
actually really critical now.
yeah, I totally agree. And how AI is changing the way B2B companies should think about go to market.
You thinking internal operations or with their own product or all the
Yeah,
other?
yeah, for external go-to-market, what can be the differentiator? What do you recommend? What do you see right now? What's some kind of thing that, oh, it might work now because AI is automating all these things, but not this one.
Well, I don't know that there's a brand new spear that works that didn't before, but I think what we're finding right now is a lot of individual personal productivity at the AE level. So if you think about sort of the ideal paint the vision of what we'd like go to market to look like in an AI native world, it is optimizing all time for humans to be talking to humans right now. I'm focusing on enterprise first. We can talk more about like product led, but I think at the enterprise level, think about the amount of time that is being spent on administrative work still. If you're still filling out a field in a CRM, I think that is like a failure of the rev ops and sales organization to solve for that. Similarly, research, writing follow-up emails, all of those things can be done for you. And so we keep talking about optimizing for selling time, idea being how much of your time is spent either on the phone, on a Zoom, or in person with a customer, and how do we do everything in our power to automate away the rest. Now, I want to be super clear on this. I do not mean you're going to ever get to 100%. Humans need to be in the loop. They need to read the emails. They need to make sure that they are correct, that you are providing the right advice, whatever. That matters still, but I think we can get really far along that journey. And then I think there's some other weird stuff happening more on the product-led front. And as we think about, a future state where there could be buying agents and selling agents, or the person procuring software is no longer a person. That starts to change a lot of things. But I think, for the purposes of this conversation, thinking a little bit more about the current state of sales and kind of where you can get leverage, I think it's mostly personal productivity. And then I actually just wrote an article talking a little bit about the AI for managers. And I think internal operations of go-to-market are changing really fast too, and thinking about how to get more leverage out of your day. And again, spend more time coaching, more time on the things that a person's really good at and less administrative. And I think that's pretty exciting for sales.
That's great. And so what does buyer trust looks like in AI native sales motion for you?
I don't know that it's changed. When I think about building trust with your buyer, there's first at its core an understanding of the problem set that they have and how your solution matches it. And I think the best sellers will continue to do that. That also extends to how we think about marketing and product and how we position and talk about products. More than ever, though, I think we're actually seeing that everyone has to sell to the CFO. And so even if you have a champion and a buyer on the other side that's fully bought into what you're selling and excited about your solution, the justification at the finance level and like the business case level is more important than ever. One of the things I feel like I keep seeing is these ROI analyses, and everyone's going to save you 30% of your time. It's okay, but what time are we saving? And is it the right time? And how do we quantify that? And so I think there is a moment right now where companies they would do well to spend more time thinking about the actual business justification and how they think about time savings, quantifying revenue opportunity. What does that actually mean? Especially in the broader tech stack, because nobody's using one tool in a silo. And so I think that part is, I don't know, again, ROI, business case, whatever you want to call it, actually taking time to think through that and help arm your internal champions with that information is really helpful.
That's great. Yeah, this reminds me, because I was building communities for Google's developer products. And then we were always saying that we were building communities and we were hosting a lot of events, but not just one-off events. We were hosting monthly events, developer meetups, a lot of gatherings for the startups. And this was building the trust. So whatever we launch afterwards, and it was people were trying to use and all these things. So I think it takes some time and human connection, real human connection instead of AI slop, like all these things.
It's funny. I guess I was focusing on the sales process, but as you said that, they actually potentially more important part is expectation setting and product delivery. So it has to work. And whatever we talked about the business case side of this, of getting it through the door. But I think you have this sort of crossing the chasm moment where you have to get it actually implemented, adopted, activated, whatever words you want to use, and it needs to do what you said it was going to do. And that's the real moment where trust really comes into play. And we've seen moments where people are wowed and it far exceeds expectations. And I think that's super cool right now. The impressive moments of AI and when it just blows you away, I think that's just amazing on the customer front.
Yeah, totally. And also one thing that I found really interesting and I really like it is actually in stage 2, your model is not built around just the investors. built
Right.
around the operators, people who does the work, who knows
Mhm.
it, not, oh yeah, it might be a good opportunity, business opportunity, not the financial side. As far as I know, you have a large network of go-to-market leaders
Yeah.
behind the fund. So how does that change the support you can give founders after the check? So what do you give to them?
Yeah. So I'd say we differentiate on go to market, to your point. And so I think there's two ways we do that. The first is that we work in a pod model, which basically means two partners work together on every deal. Two of our partners come from operating backgrounds, have run sales teams like me. Two of our partners come from more traditional finance VC. And the idea is we each get to bring our own strengths to the table and we work together to support the deals that we do. And for a founder, that means you don't have to pick profile. You lean in on the expertise you need. If you're hiring your first VP of sales, I will help you scope it and interview and write the interview process and get the right person in seat. If you are building your fundraising plan or financial model, somebody is going to help you with that too. And then the really exciting part is what you alluded to, our LP base. And so we now have over 1,000 go-to-market executives who've invested in our fund, thereby our portfolio companies, and they're super motivated to help. That can be anything from candidate introductions to talent referrals and references to BD intros to advisor, consultant, board member, presenter, one-off question. You name it, we have probably tried it. The idea there, though, is you're surrounded by this large group of people, which when you think about 1,000 strong, we can connect to most people in tech or get an answer to a question. And I think the most powerful examples of that have been these one-off questions where somebody will be like, I'm working on a deal at insert company name. I'm trying to understand their procurement process. Can anybody help? And we'll have two LPs put up their hands and be like, oh yeah, I sold the deal there in the last 6 months. Let's jump on the phone. I'll walk you through exactly how it worked. And that real time, very actionable insight can be like a trajectory changer for a company. It's very cool to see in action.
Yeah, I 100% agree on this because I think one of the most important thing is, okay, you launched the product, but who's going to use that? And if a
Yeah.
company, proven company use that, if you get an access easily to get that, so I think it's a really big opportunity.
Yeah.
That's great. So do you think, is it this operator network is part of the stage two's moat as a fund?
Yeah, absolutely. I mean, when we set out to build this group of people, we are now 4 funds in. And so we've had time to amass the best and brightest and go to market, literally. And we're constantly thinking about the next generation of leaders and who's coming up. We look at this absolutely as a differentiator. And I don't know, to your point, a moat. But when I think about the last few deals we've done, LPs are always in the mix. And whether that's helping us source the deals, diligence the deals, support the deals, it is end to end a place where we want to get people involved.
That's great. So let's just make this one, I think, very useful for the founders because if a founder is listening this,
Yeah.
so I want them to understand. So they are building an AI space. So what they should stop doing right now, according to your experiences?
What they should stop doing?
Yeah.
Well, I don't know that I have a good blanket answer to that. So like company specific. So company specific, market specific.
They are building an AI space and they are doing it. You see it from all the founders that comes and you're like, please just stop doing this because I have seen a lot. I don't
Well,
want to
in the
hear the same
pitch,
story.
I'll say
Yes,
that.
yes.
Let's do
Sure.
that. I think the number one mistake I'm seeing in the pitch right now is people are starting with a very niche wedge. It is
Mhm.
a small, controlled product that they're trying to tell the story of land and expand, which is awesome. But then they're also painting a market size that is, I don't know, whatever, $300 billion, right? They're picking crazy numbers. And that's awesome. There is a small wedge and the big vision, but so often missing is any linear thought process from how you move from one to the other. And I think where most companies are stalling is they're not able to expand beyond that initial wedge. And so you want to have a really believable, really thoughtful view of how you sequentially go tackle the next opportunities. And I feel like that's missing a lot of the time right now.
So what sounds impressive for you for the B2B AI pitch? When you see that,
Clarity.
oh yeah, this is really cool kind of thing. What's something
Yeah.
that's kind of, ooh, yeah, that's what I was looking for, kind of.
Clarity on what they're going after and why. And I think,
Okay.
honestly, of course, team matters, founder market fit. The person that you are talking to is so critical. But then when
Mhm.
they are talking about, I want to hear that they're passionate, that they want to solve this, that they have a reason they want to do it, not I stumbled onto something that could work. All right, you want to hear that there is real excitement about a long-term vision for what they're building and the why behind that. And I think that comes through when you talk to someone who's super genuine and excited about the problem. It just radiates.
Yeah, that's great. So before we close, I want to pull this back to the bigger picture of AI and company building. So 5 years from now, what do you think AI founders will realize they misunderstood from scaling?
I think we're going to see the hiring profiles change a lot. I think we're in a really
Oh.
weird moment right now where
Mhm.
we don't actually quite know how to interview for the skills that are going to be required in the future. And we're starting to see those changes. But I was chatting with somebody last week about this where our engineering interviews are kind of confusing right now. And some companies are still doing live coding assessments and saying you can't use any AI. And others are encouraging people to use AI right and left. And there's just not a clear view of what you're assessing at the moment. And I think more than ever, really good problem solving, really good judgment, and this kind of, I don't know, grit and entrepreneurial spirit are going to be so critical. For certain, we're still going to have defined, clear roles in companies, and deep domain experience and skill sets will matter. But I think right now, that generalist profile is really exciting. And it's just going to see how do we suss that out and figure it out in the interview process to make sure we're nailing those early hires.
Wow, that's great. Yeah, thank you so much, Liz. It was a
It was
great
great to see you.
conversation. I really enjoyed. Yeah, thank you.
Amazing.